This is Timely Options with your host, Nick Garland. Today is October 8th, and wow, what a day for the market. The Fed minutes came out, and if you follow me on Twitter at MilkMoneyNick, that's my Twitter handle, then you know for the last day or so I've been pretty bullish, even though the market itself has been really bearish. I kind of saw the Fed minutes as just being the last hurdle or the last catalyst for the market to really just take off from these lows. Here we have the S&P or the SPX. You can see the 2-year channel that I have here held up perfectly last Thursday, but today actually it started out, it broke to new lows initially in the morning, but then it held. And wow, let's zoom in here. Look at this bullish engulfing candle right here. Just massive. Really good looking candle here. And you can look over the past here, past dips. You have a very bullish candle and some nice follow through. Kind of signaled a leg up in the market. The other thing I'd be really careful of is just look at all this volatility. Soon as October hit, we just have all these days with, look at this huge range of the S&P just chopping up and down. So even though these bullish engulfing candles typically can kick off a day, a leg up, I'd be a little bit cautious just on, look how massive, just this huge range for this candle. Let's go back a little bit more. It's actually pretty hard to find any instances of really bullish days that didn't have at least some follow through. Here's a very bullish day right before a long leg up. Very bullish day here. This little dip. A little bit different back here. We have some nice rounded bottom at the bottom of the channel here. That would have been a good buying opportunity, obviously. Then all the way back up. I always try to take stock of how it felt, whenever the market was way down. This is the hourly view, 90-day hourly on the SPX, and when I got up this morning and I checked the market and I just saw that it continued its march down and broke through that 2-year resistance to new lows. I mean, even I was a little bit wary about that, but I just had a plan. I was going to wait until right before the Fed minutes to start taking up some positions. And wow, great call actually on my part, because then look at this, boom, right off the Fed announcement, which was great. I thought the last Fed announcement was really bullish. The idea that you're backing off of the idea of having a set date and moving to more metrics, watching for certain data, and then now you have all this bearishness in Europe. It's really just dragging on the market and pulling it down, and then the Fed coming out and saying like, well, as long as Europe is super weak, I mean, well, if anything, we might push the date back, simply because the growth in the U.S. is going to be hampered by just how horrible things in Europe are. So, there's a little bit of contrarian reaction to say, to say that bad news is good news. But this is also why, personally, I'm more of a technical trader than a news trader. Because, the way I think about it is, let's say that back here, the S&P had just, driven all the way up to the top of this channel and just kind of hovered and compressed all the way up to the top of this channel, and the same news came out. I think the opposite would happen. I think that if we were at around 2060 today instead of down here at 1924, I think the Fed coming out and saying that Europe was weak would have resulted in the markets actually tanking. But because we're so far down here, and because I think technical levels tend to override the news, I just think that we found a positive way to react to the news of basically the Fed coming out and saying that Europe is horrible. But that's just how the market goes, and it's kept me more objective this year, and definitely helped my trading. And been really profitable for me, so I'll keep doing that. Let's move on to a stock. Of course, one of my favorite stocks is Apple. I'm a member over at Apple Trader. Great community. By far my favorite community on the web for trading stocks and for stock traders. Not necessarily investors, but more traders. And of course, there's a big difference there. But looking at Apple, today, just like every stock, it looked pretty bearish whenever it opened. It actually looked like it was falling to the bottom of some compression here, some falling compression. And by all means, looked like it was ready to just fall off the edge of a cliff and come on down to 94, 95 area. But instead, here we are, right after the Fed minutes, just like everything else. Look at this gigantic bullish candle. The irony here is that I personally, the only thing that this candle does is negate a slightly bearish outlook for me. And now this very bullish candle just implies neutralness, like a neutral action, I feel, in Apple. So, I still have this long neutral wedge, and I think that Apple's just going to compress around this tight little range until we get to earnings, which is on, it says 10/20, so I think that's a Monday coming up in just a couple weeks here. I think it's just going to compress right into this area, and then who knows. Personally, as much as people, Apple fans, don't like to hear it, I would like the stock to actually pull down to sell off right after earnings, or to be very limited from Monday through Friday, and then kind of pull all the way down to say around 93 area, or just start a slow descent even. But right after earnings, if we got a pretty violent 3-day fall right down into say 93, then I actually would start backing up the truck right at that level, and start buying calls in Apple. So my big trade of the day was Delta Airlines. If nothing else, because Delta Airlines actually bounces really nice, and of the many stocks that I was looking at, it was the best deal to get into roughly half an hour before the Fed meeting. So here we are. We actually still have very bearish action even after today. Still very bearish on Delta. But I expect some follow through, a little bit of follow through in the market, or at least some neutral to bullish movement in the entire market. And I think a lot of stocks are going to do that too. Delta included. So what I did is, we'll zoom in here. Here was today, and here we are about half an hour before the Fed minutes were released. I know the video is really choppy, so luckily the audio normally comes through. But right around here, 12:30, we actually were hovering a little bit over 34, and what I did is I bought a very risky position for the 35, expiring in just 2 days, and it cost me 20 cents. And look at this, 1 hour later, 1 hour later, I sold it for 150% profit, for 50 cents a position on that, and just got out. And of course, Delta pulled back just a little bit, but really bullish action on the Fed minutes in the news, and that goes true for the entire market. You can see here that there's some resistance around the 200-day line. So, if tomorrow, if it's really bullish, I think it would pull back after 35.80, right around the 35.80 area, maybe 35.70. It's not an exact science. It's just very close to 35.80. I would probably sell and then see how Delta acts from there. Maybe it just tags the top here and just slowly drifts and comes right back up to it. Who knows? But for a lot of stocks, I'm pretty bullish at this point. So let's look at Zillow. Zillow's another one. Zillow's one I got into yesterday, and I was sitting on a loss today. But it was okay. I kind of figured that I might take some loss on Zillow for just a little bit, and so for me, I took a loss on Zillow for, I guess all of 4 hours, But I bought the October 115 for $1.75 yesterday when it was really, really low. And look at this. So here's the day chart on Zillow. Oops. What happened here? Okay. Here's the day chart. We still have this bearish trend line all the way down here. But if you zoom in, there's another bearish trend line, a more aggressive one. And that goes back about 2-3 weeks here. And we're breaking out of this more aggressive one. And oftentimes what happens is that former bearish trend line will act as resistance. So what I'm expecting Zillow to do is to rise all the way up to about 123 area, 123, 124, and I think I'd be interested to see how it acts right whenever it reaches that point, that line. Also, there's this 50-day moving average, and that would also seem to meet right there. Something I normally do is that, this, if you look on the chart, the date here says October 20th. That's a Monday. So, I already have an automatic sell on my phone, or not on my phone, on my account, so that whenever it hits 123, about 123.50, that it's going to sell anyway. But I'd be very interested, anyone out there who's interested, maybe set an alert a few days before, around 10:16, and just see where Zillow is at that point. It's pretty interesting, and I do that for a lot of my trades. I'll speculate with the chart because I have such a long list. I'll put a little reminder in my phone to come back and check it, check the stock to see if it's going to trade the way I want it to trade before I get in. And that's a very important thing for me. I usually don't buy off of alerts, for instance. I like to see a chart kind of fill out a form, give me lots of technical confirmation before I really take a big position. So this is the hourly chart for Zillow, and I have a little bit of speculation going on right now in the intraday action for Zillow. Maybe I'll go to the 15-minute chart. So this is a 3-week 15-minute chart. Actually, it's a 1 month 15-minute chart. But what I'm trying to do is figure out how it's going to trade from here. Sometimes even whenever a stock is bearish, sometimes you can pick out what I would call an acceleration, or a curve, which in physics or graphing, just a slope of a line, to see what kind of support you have. I kind of, I don't know if you'd call it divining or something like that, but I kind of see, about this angle of ascent, if that makes any sense to you. And it's highly speculative at this point, and I can't really use it to trade with, but I would be really interested if say Zillow is neutral for a couple days, or let's say Zillow finishes somewhere around 113.50 tomorrow, and then for Friday maybe the market just kind of pulls back a little bit or stays neutral, which happens a lot on Fridays. You get a lot of compression in a lot of stocks, and then let's say it's Monday and Zillow hits this the bottom of this curve. At that point I'd be willing to put on a bigger position in Zillow. I would have lost some money waiting this entire time out in my position, but I probably would add to it and see if from here Zillow got more aggressive, started rising more. So let's take a look lastly at Solar City. Solar City is an interesting one. Here's the 2-year chart. I kind of have this area between 50 and 55 marked out as a kind of a resistance area. It's chopped within here. It's a pretty significant area as far as trading SolarCity, and it's been really bearish recently, and it's dipped into that zone, but it really hasn't traded well into it. Hasn't really traded well into the 50-55, and of course I don't really think that's going to be possible now that the market is really bullish. But let's zoom in a little bit closer. I do expect SolarCity to lag a little bit, and this is why. Let me get rid of this rectangle here. So even though we have, these are the edema lines that I use, even though they're starting to pinch, and I like that the blue or the faster 5-day edema is leveling out here, and the slower 13-day edema isn't as extreme. It's just barely starting to round up. I think we could chop a little bit more. Here's SolarCity back in Thursday. As you can see, pretty bearish. And then here it is yesterday and today. And what the big thing that stands out to me is yesterday it broke pretty significantly down lower than it did last Thursday, whenever it was really bearish. And then even today it broke down again, made newer lows. So it just keeps on making lower lows. And the only positive thing that I can really say for SolarCity, here's one. Whenever the DEMAs are contracting, normally the MACD lines are also contracting, and you can also see that I have a little green bar on the MACD, and that's typically pretty good too. But let's go to the hourly, take a look at SolarCity. Anyone who, again, if you follow my Twitter, then yesterday I had an automatic order to buy SolarCity whenever it hit 54. And let's see, I have an alert blocking the way here, so let me get rid of this alert. Style, okay. There we go. Kind of clean this up a little bit. I did the same thing with SolarCity as I did with Zillow, and I've done it with Disney, and I do this with a lot of stocks. I try to speculate, the angle that the stock could accelerate out of its bearishness. So this line here is what I was using as my bearish trend line. As you can see, last Thursday we kind of broke above it, and then we kind of rode it down here. We had tried to break out over 60, but there were still sellers. We tried to break over 60 over 2 different days, and there were still just sellers in SolarCity, and it just failed. And it actually was more bearish than a lot of stocks I watched, which again is why I'm a little bit hesitant to take a really big position in SolarCity until I get some confirmation on it. But yesterday I got triggered right whenever it was just at 54, just barely above 54 actually. Automatic buy for a day trade, and then sure enough, first minutes of the market today, automatically triggered. I made 75% on that trade. I bought it for 70 cents, sold it for $1.25. So that was great. And then here we go today. Zoom in a little bit more. This is the hourly chart, the 15-minute chart on SolarCity. And sure enough, right after I sold it, all this bearishness, all that bearishness kind of started to level out right here at 54. Again, it got all the way as low as 53, 55 today. It pretty much leveled out right at 54 and then took off from there. And I got an alert when it hit that bearish trend line, at 56 today, and I was just watching it. Wasn't really sure if I should get in or not. And then it kind of accelerated out, tagged 56, went over again, and I watched it all the way near the end of the day before I pulled the trigger on just a small partial position in SolarCity. So I'll hold that. The thing with SolarCity is that when it decides to move, it moves quick. It moves really, really fast. So Solar City, it's not unheard of for it to move, say, $8 in a day, and this is at $56. So I mean, that's a pretty sizable move. I mean, that would be like a 12% move or something like that. I can't really calculate it right away in my head, but it would be pretty massive. However, if my speculation, which I'll color this, my speculation is right, then we could just have Solar City kind of be neutral for a couple days. Tomorrow I might risk if it somehow gets down to 55.24 tomorrow, then I might take a position in it again, or add to my position. And I'll just watch it. I'll watch to see if it just accelerates higher. I might get into a position early, or if it just trades neutrally. It might trade neutral for a couple days before I actually get in on it. But once this stock takes off, once it goes bullish, I think it's headed very quickly to reclaim a lot of the lost ground that it lost. I mean, I think it recently peaked out. Let's go back to the daily, around 76. It went from 76 in a very short amount of time in a very aggressive way, all the way down to 53. I think it was grossly oversold around these levels. I can kind of understand 54. If we go back here, 54 was kind of a significant area. Tried to break out around 55, 54, and again here 54.81. Before really taking off. So this 54 area, 55, 54 has been really significant support. So I'll watch this. I'll see if we get some more, actual DEMA cross, bullish cross here. And if we do, I mean Solar City could just take off. I've seen it before. I mean, this could go all the way up to, well, I think the first level to watch is to have it go up to about 62, maybe up to the 200-day around 65. I think that's kind of the first area that it could consolidate for a little bit, right around here. And then I would expect it to actually just start another leg right before earnings, start another leg all the way up to 70 by earnings. And who knows? I'll just leave these up there. We'll see if that plays out. If it gets up to here, it rests for a little bit, and then makes an attack for the 70 area right at earnings. That'll be interesting. But that's it for tonight, and probably have another show up. Trying to get used to this video podcasting and just podcasting in general. So I hope it helps somebody out there. And if you have any questions, look me up at Milk Money Nick on Twitter. Great, have a good one.